Hello watch collectors! Watch prices have been going up. In this quarterly update video, I'll be sharing some of my thoughts about the current state of the market and try to unveil the underlying reasons for the recent growth. Unfortunately, I think this might be a story about fear and uncertainty as opposed to an organic recovery after 3 years of decline that preceded it. All the data in this video comes from WatchCharts, the world's leading secondary watch market research platform. Dive into the data yourself at WatchCharts.com. The overall watch market seems to be turning around. September saw another jump for the secondary watch market after one that happened back in March and April. For context, the US government implemented the 39% tariffs on Swiss imports on August the 7th. Before that, it was 10% since early April. The higher reciprocal tariff rate was announced back in April as well, but quickly put on pause until August. Looking at the performance of the index by quarter. This past quarter marked the second consecutive quarter that the WatchCharts overall market index recorded a gain. This is after 12 straight quarters of decline starting with the second quarter of 2022. What's been contributing to the rise? Let's break it down to the brand level. Last quarter, almost half of the major brands were in the positive territory. This seems like a remarkable turnaround compared to the previous quarters when all but a handful of brands were in clearly downward trends. Brands that appreciated included quite a few mid-level brands, such as Omega, Breitling, Tag Heuer, and Tudor. Also notable are the finally flattening prices of AP and Vacheron, which were down 1.3% and 2.9% respectively in the second quarter of the year. One brand, however, clearly stands out. Patek Philippe gained 3.9% last quarter. This is led by remarkable performance of the sports collections. The Aquanaut collection gained 5.6%, and the Nautilus went up 4.0%. We can take a look at the collection breakdown over the past year. A trend clearly emerges. The Aquanaut and the Nautilus are clearly outperforming the dress counterparts. In fact, if you only looked at the dress collections of Patek, while the pace of decline is clearly slowing, they're not showing any signs of recovery just yet. This disparity between sports collections and dress collections is also obvious when you look at how well the watches hold their value. Each of the 3 sports collections trades for at least 38% above retail, while the dress collections all trade for more than 40% below retail. In fact, all of the models that trade above retail are sports watches, and all of the models that trade below retail are dress watches. By the way, the brand's value retention was strongly worsened by a 15% US retail hike that happened on September the 15th, which our last video actually focused on. Click on the link on your top right corner to check out our take on how that's going to impact the primary and the secondary market dynamics of Patek watches. Let's now talk about Rolex, whose performance obviously heavily influences the overall market because it accounts for around half of the secondary market. Last quarter, it gained 1.3%. Over the past year, it is actually the only other brand besides Patek that has appreciated. Most of the other brands depreciated between 5% and 13%, with some brands like Blancpain and Piaget losing more than 15%. In comparison, this represents clear signs of stabilization for Rolex, given that the Rolex overall index has lost around 27% between the market peak in March 2022 and October 2024. While the crash since early 2022 has maybe felt drastic, if you zoom out to the bigger picture like we did here, we can actually see that the Rolex market is basically at the same place as early 2021 and has gone way up since 2019. Diving into the collection level, 2 Rolex collections that led the growth last quarter were actually both dress collections, the precious metal Day-Date and the Datejust. This is in contrast to Patek's gain, which again is solely because of the growth of the sports models. In fact, looking at this graph, we can see that most collections of Rolex have gained last quarter. This also means that over the past year, the most popular sports collections, namely the Daytona, the Submariner, and the GMT Master, have lost just less than 1%. So we can probably argue that while Patek's recovery is due to a concentrated interest focusing on its sports collections, Rolex has been stabilizing and recovering pretty much across the board. Now let's talk about a brand that's been outperforming its class, Omega, which has gained 2% last quarter. That makes it the best performer among mid-level brands. Both the Speedmaster and the Seamaster collections are up around 2% over the past 6 months, showing clear signs of recovery. However, the value retention of Omega watches was actually negatively impacted by a 7.9% US retail price hike that happened on October the 1st, along with other brands under the Swatch Group. This is the second price increase of 2025, following one that averaged 4.3% back in May. For example, the 3861 Sapphire Sandwich Speedmaster now costs a whopping $9,000 compared to $8,000 just a few months ago. That watch trades for around $6,000 on the secondary market, so it's just around 2/3 of the pre-tax retail price. That's a pretty big dent to the value when you walk out of the store. As an aside, only one Omega model trades above retail, which has been the case for a few quarters now, which is the Silver Snoopy 50th anniversary. And Omega wasn't the only mid-level brand who jacked up the prices. Cartier also had their price increase in late September, raising prices of its watches by 8.1%. Tudor also raised their prices on October the 1st. Interestingly, they did this without Rolex raising the prices, despite obviously both being owned by the same Rolex group. IWC raised prices of just a few gold models slightly for a brand average of 0.4%. It is pretty notable that on a year-to-date basis, Patek, Cartier, Omega, and Tudor have all raised their prices by double figures in 2025. On the other hand, Rolex, AP, and Richemont brands, including Vacheron, have not adjusted their prices since the tariff was implemented in early August. For as long as the higher tariff rate remains in effect, I would say the price increases from those quote-unquote holdout brands seem almost inevitable. So this actually brings me to the main point of this video. You have all those brands who've implemented their second, if not third, price hike of the year, while you also have those brands who have not yet implemented price hikes as a response to the 39% tariff, but everyone's thinking is probably going to happen sooner or later because the higher tariff rate is still in place. So what we're seeing now, and this growth that we're observing on the secondary market this past quarter, might simply be a reflection of collectors rushing to the secondary market and buying watches on the secondary market because they fear or because they know that the higher retail prices are going to push up the secondary market prices as well. As a result, it's probably a bit difficult to argue that this short-term demand hike is a reflection of an healthier or an organic recovery. It can certainly be the case that the watch market is seeing renewed interest after 3 years of consistent decline, but I think at the moment it's probably more likely that this secondary market demand that we're seeing is simply because it's replacing sales on the retail market. If that's the case, I would be hesitant to say that this watch market today is healthier and more organic than the one that we had last year. Because what we're seeing now is different from what we saw 5 years ago, which, if you remember, a lot of people were really getting into the watch market. Those people who weren't interested in watches were beginning to get into watches, whether for hype or for just getting a new hobby during the pandemic. Right now, what we're seeing is simply watch collectors essentially shifting from the retail market to the secondary market. And I think that divergence between the retail prices and the secondary prices, which is probably going to get steeper as more retail hikes come, that's going to be almost damaging to the secondary watch market. And that's why I don't want to categorize the recent growth of this past quarter as a recovery of the overall market, because I think the underlying cause is actually pretty unfortunate. Many watches have simply gotten way too expensive at retail, so many collectors are turning to the secondary market for alternatives. Another cause for concern, by the way, is the fact that the growing demand this past quarter is very heavily concentrated among a small number of brands, namely Patek, Rolex, and to a certain extent, Omega. In fact, it's even concentrated among some of the collections of those brands, namely the Nautilus and the Aquanaut. An organic recovery of the watch market would see most brands recovering in popularity and in value, and we're just not seeing that yet. Right now, the new dynamics on the watch market are probably mostly due to the high and frequent retail hikes that we've seen so far this year in 2025. What do you think will happen to the watch market? Are you optimistic or are you pessimistic like I am? Please let us know in the comments. Check out our website, WatchCharts.com, where you can explore pricing for over 28,000 watches, track market trends, and even monitor your collection's value over time. And if you're looking to buy or sell among fellow collectors, head over to our marketplace at marketplace.watchcharts.com. Our last video takes a deep dive into Patek's retail price increase on September the 15th and shares our thoughts on what that means for the secondary market considering Patek's standout performance so far this year. So please go check it out if you haven't. Thank you for watching and we'll see you next time.